What up, what up, what up? Good morning, peoples. Hope everybody is doing well today and you have a blessed day. Let's check out some charts. It is, let's see here. It is 8:03. So, New York open. The New York trading desks open probably, some traders, I'm sure, get there early in the morning, right? They want to see what's going on before New York trading desks open. So let's check out some charts. But the New York Open is at basically it's right now. So from now, let's see, 9 a.m. would be 7 a.m. here. So 7 to 8 is usually a pretty big trading period. And as you can see, we had a big pump here. And that is probably from those traders that, oh, wait, hold on. Let me here we go. See, there's a big pump here. And as you can see, we're just kind of going sideways, sideways, sideways. Then New York woke up. And what do we get? Looks like they're bullish this morning, followed by the volume, so you know it's real. And my prediction is we will go raid the last week's high right here, or last week's middle, I mean. And then if we can hold that as support, then we'll go hold the 236 and then raid last week's high. That is what appears to be happening. This could be manipulation. It could pump, 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 and then sharply reverse. Again, that's why if you've been following me long enough, then you know my strategy. And what is my strategy? My strategy is easy. Buy on the red days, sell on the green days. It's simple, right? Right? Buy low, sell high. So if you're buying on the green days and selling on the red days, well, you're doing it wrong. Come check me out Thursday nights, 5 p.m. Eastern. 5 p.m. Mountain Standard Time here on my YouTube channel. I teach this stuff. I give away tons of free value. If you want to understand how the 3-hour chart works, that's what chart we're on, or actually we're on the 15-minute. So I have a 3-hour playbook, and it teaches you how to trade the 3-hour chart. And the reason I'm on the 15-minute chart is because I was on the 3-hour chart, and there was this big pump right here. And I was like, what the heck? Because just a minute ago, this candle right here had been pushed down by the sellers and was about to go bearish. And then out of nowhere, what happened? Boom, New York woke up, pushed it higher, and now it looks like we're going higher. So when a big pump like this happens on the higher time frame, you can see this pump on the higher on the daily. But when pumps like this happen, if you want to see what's going on a more local level, then you go to the lower time frame and you can see exactly what's going on. So from the 3-hour, I usually go to the 15 or the 45. Let's check out the 45. So the 45 is confirmed by volume here. And then if you want to see even closer what's going on, you go to the 15-minute. And if you want to see even closer, then you could drop down to like the 5 or the 3 or the 1. So there you go. 5-minute candle pump. And then I just check out. I don't hang around too long. And then I'm back to the higher time frames. So as you can see here, this morning when I woke up, around 5 a.m. Mountain Standard Time. This is what I saw. Well, and see this big wick right here? This was down here, battling this resistance right here. And then when it finally got through the resistance, I was on the 3-hour chart. And this candle, like I said, was below this red resistance. So that's why when you are getting ready to enter a trade, you go down to the lower time frames to find your best entry. Because if you're on the daily here, right, and you see that we're below this price action right here, so price was right here, and you're thinking, okay, yeah, because of these equal lows right here, whenever you have an equal low or an equal high, so see these equal highs, equal lows, that is indicative of a reversal. Not always, but usually. So I was predicting that, okay, we're going to get a pump here sometime. And it happened actually before I was ready to enter the trade. So what do? Well, you don't trace a chase. You don't chase a candle or a pump, right? See this wick right here? It's already retracing. It's not going higher, if you will. So that's how they trap traders, is people are on the lower time frame down here, right? On the 5-minute, they see this big pump after just a long period of going sideways. They see a pump, and then they think that we're going higher, which we could go higher. But if we were going higher, it would have been followed by another big pump. But look, it's been followed by 1, 2, 3, 4. But when you're on the higher time frame, you can see what's happening. See, it just pumped up, but there's still that wick there. So until that wick gets taken out, until it pumps back up, then you don't get in. You got to wait for a new candle. You never get in. So if you weren't in down here, you don't get in up here. Does that make sense? It should make sense. What do? We buy on the red days, sell on the green days. So you should have been buy. And then obviously you scale out as it goes higher. So that's the daily. If you were to ask me, now we're probably just going to trade sideways. So here's the 15-minute chart zoomed in. You see that pump there? Is that sustainable? No, it's going freaking straight up. So what do? You go like this. Put your Fibonacci on there. Wait for it to retrace into the golden zone and do what? You buy. That's right, people. Buy on the red, sell on the green. Easy peasy lemon squeezy. So we'll wait for this to pump. And then once it starts, when you see a red, 1 or 2 reds in the opposite direction, then that would be a good time to put your Fibonacci on there and wait for it to find support in the golden zone. talked about this before. I talk about it usually on every video, but this is how the game works, people. It's support and resistance. You wait for price to react at certain levels, which it did right here. This red level right here is last week's middle price, or low, I mean. We're heading towards the middle of the parallel channel and the middle of last week's session. So we got last week's high, last week's low, yesterday's low, yesterday's high. Okay. Price always reacts at these levels. That's all there is to it. So here it held support. So when it held support on yesterday's low, then you wait for it to react. If it holds support, then you enter into long contracts. You should have already been in at this point, right? You should have been in around here. Because what happened, it never sustains. Dump, dump, dump. Does it keep going? No, it always finds support and retraces. And now pump, pump, pump. What's going to happen? It's going to retrace just in the opposite direction. See how it retraced up and up? We're going to retrace down. And if we're going to continue higher, then we'll go up. So as long as, again, you just buy on the red, sell on the green. It's contrarian. It doesn't make sense because people see big pump green and they get FOMO, fear of missing out. And so they enter here and then price reverses and they get trapped here. And that's what happens over and over every single day. So we're coming up on the middle line of the parallel channel. That's these two blue lines here. So usually that's a level. And then we got the middle of last week's session. So that's a level. So we're going to wait for price to reach here and see what happens. What's likely to happen? It's probably going to hit here and then retrace. And once it does that, you will draw Fibonacci on here from like here to wherever it goes to. Wherever it goes to, wherever you find it, wherever you get that wick. Okay, you put it there. Wait for price to retrace into the golden zone. Wait for it to react in the golden zone. Is it going to go? It will go higher or lower once it finds support in this level. It does always, over and over and over again. It's just how price works. And it's how psychology works. Everybody uses the same indicators. Some people use just support and resistance lines. Some people use the parallel channel. And by use, right, I mean they rely on it heavily. And if you're smart, then you know everybody else is using the same indicators that you are. Well, you got to have every indicator that everybody's using so that you know where price is going to react. You know that price is going to react at this middle line because the parallel channel traders know that usually price will react at the middle zone. Either will accept it or reject it. If it accepts it, that means we're going higher. If it rejects it, that means we're going lower. That's it. That's all there is to it. And if you want to understand this stuff on a deeper level, then check out my Thursday night masterclass. I go live every Thursday on my YouTube channel here at CJ Peart. And I teach this stuff for hours on end. I stay on till the end to answer everybody's questions and help everybody in however I can. And then obviously if it's, I can't give everything away for free, right? We're marketers, we're traders, we're business owners, we're investors. What do we do? What do we seek? We seek cash flow. That's what I teach. I teach you how to use other people's money to get cash flow, to then take that cash flow to buy assets, Bitcoin, real estate, cash flowing businesses, notes, anything that you can buy with other people's money that creates cash flow, enough cash flow to cover the payment on other people's money. Other people's money costs money. If you have good credit, you can go to any of these large banks, open a bank account with $100, tell them that you have a business that you're thinking about moving to their bank. You have a business, it generates such and such per month. This is how much money you're going to be funneling through the bank every month. This is your average balance that you're going to hold in deposits every month. And then you talk to the banker and you create a relationship. And that's how you get access to larger credit lines. It's relationships, people. You have to create relationships for benefits. And in this day and age, you can create digital relationships. You don't just have to, you can connect to so many more people these days because of digital access. Facebook groups, LinkedIn, Instagram, YouTube. That's how you found me, right? So I teach more than just trading, you guys. I don't use trading for income. I use trading to make and stack Bitcoin, to make more Bitcoin and to grow my Bitcoin stack. And how I do that is through perpetual futures trading. That's what we're doing here. We're trading Bitcoin perpetual futures contracts with leverage, low contracts, so that you can never get liquidated. This is a big boys game. You got to have money to play it. So the more money you have, the more money you can make. And when you have, let's say, just a small conservative $10,000 account, right? Then you can open $100 positions with 50x leverage. $100 times 50 is 5,000. Now you're working with $5,000, not $100. That's the power of leverage, my friends. But what do most people do? They play around with leverage. They don't understand how it works, and they give the markets their money. This is just human psychology. People are greedy. They want to win and think that they can become rich overnight from trading because of the influencers and everybody out there in the ethernet saying, "Oh yeah, trading's easy. You can do it. You can make so much money, no problem. Yeah, you could be a day trader." And then what happens? Well, you get into the markets, and this is usually the path that most people take. They see a video or somebody promising riches online through trading. So they're like, okay, let's check it out. They open a trading account. They put some money into it. They lose all the money that they put into it, and then they never trade again. Then there's people like me where that happens. You can make a bunch of money trading. Okay, let me check it out. I check it out. I find out that, yeah, you can make a bunch of money trading. I put some money into a trading account, lost it all, or hold on. So when I first started trading, I learned through the Forex market. So I paid to join, a prop desk, a prop trading firm, where they promise to teach you how to trade. And then if you are successful, in their program and you make it through their program, then they will give you money, their money, to trade. And then you get like 60% and they get 40. And it can go as high as 90-10, right? So that's how I learned to trade Forex. And then it transferred over great for Bitcoin once Bitcoin came out. So this was back in like 2015-ish. I was learning to trade Forex before I learned about Bitcoin. And then when I learned about Bitcoin, I was like, this is the same as Forex, which it is, because you're trading pairs. Bitcoin against the US dollar, the US dollar against XRP, Ethereum against Bitcoin, Bitcoin against XRP, USDT against XRP. There's just all these pairs that you can trade. So people in the Forex who come over to crypto, they get it. They understand it. It makes sense. And so that's how I learned to trade, was through the Forex market, through, what was it? Beehive something, some prop desk. I can't remember exactly, but shout out to him. He, and the way he found out about Forex trading was he went on a mission, a church mission, to, it was Hungary. And when he got to Hungary, he found that he had to convert his US dollars to Hungarian money. And so that's how he just was intrigued. He's like, what is this all about? And then he went down the rabbit hole of Forex trading. And then he got back home from his mission, started a prop trading desk firm. And now he has thousands of kids that trade for him his money. And so, and that's smart. That's called leverage. He's leveraging other people's talents to make him more money with the money that he already has. Yeah, he has to give them, right, 75%, and he gets 25%. But what's 25% times 1,000 people? It's how it works, people. All right. So back to the charts here. As you can see, I'm on the 15-minute here. Let's go back out to the 3-hour. Zoom in here. So I just want to show you the channel that we're in. See this blue channel, blue line, blue line? Price has been respecting this channel. So as you can see, price went up, 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 rejected this resistance, fell back down, found support at the bottom of the channel, went back up, resistance, came back to the middle, back to the top, back to the middle, couldn't hold the middle, back to the bottom. And now we are at the middle again. So what did I just say? Well, what's price going to do here? Is it price going to reject the middle line and last week's middle session, or it will always react here? So we're probably going to pump into this, rate it, retrace, and if there's more buyers than sellers here, then we go higher. If there's more sellers than buyers, then we go lower, and we go retest this support level again. So I'm not worried about going lower until we break through this level here, and then this level here. Is it possible that we go and we double bottom here? It certainly is. Is it possible that we fall out of this channel, find support here, and go lower? It certainly is. And that's why we just wait for the price to react at these levels and respond accordingly. And what do I mean by respond accordingly? Either enter some long contracts or enter some short contracts. Okay. And so this is my no lose strategy. I just stack Bitcoin upon Bitcoin. When on these green days, right, you scale out of your contracts and add more Bitcoin to your stack. On the red days, you buy more contracts and you wait for the green day to scale out of those contracts. And if you're feeling really hyper focused, you can do the same thing on the way down. So you sell on the green days and buy on the red days. So it's the opposite. Buy on the red days, sell on the green days. Sell on the green days, buy on the red days. Because all that is you're just doing the opposite of what everybody else is doing. And that's what trading is all about, is being contrarian, doing the opposite of what everybody else is doing. That's how you really make money in trading. But again, I don't care about making money with trading. I just care about stacking more Bitcoin. And with Bitcoin perpetual futures contracts with leverage, when you do low leverage with low contracts, you're just stacking a little bit of Bitcoin over time, compounded Bitcoin over time. Most traders, and you can do this as well, most traders, they're looking for that risk to reward, like 1 to 6 and 1 to 12, right? I don't care about that because I know over time I will get that 1 to 12 reward in little increments. And again, that's because this is not taught. Have you ever heard this strategy taught before? Put it in the comments. Tell me if somebody else is teaching this out there. So stay close, folks. Give me a like, share, and a follow. I got big things popping. If you knew what I was building in the background, you would be way more positive and optimistic about life and about what's going on in the world. I am so optimistic. It's to a fault. People probably don't like it. Because why? Because it scares them. Because they're used to living in fear. Not me, baby. Peace, love, prosperity. Until next time, folks, be kind to each other. I love you. Peace.